In this video, I'm going through 7 growth stocks on my watch list. I'm not a financial advisor, I'm not a professional, and I'm not recommending that you buy these stocks. I'm just sharing some research in some businesses that I personally find really interesting. But that doesn't mean that I'm going to buy all of them, especially because some of them may be a little bit overvalued. So the first 3 are actually all semiconductor manufacturers. So when I first heard about semiconductors, I was like, what? But what I actually discovered is semiconductors are the little computer chips which live inside pretty much all of our devices. They live inside our computers, our phones, our cars, our fridges, and even some of our speakers. And they're becoming more and more popular as more of our, everyday items start to get connected to the internet. For example, those robo vacuum cleaners, I'm sure they would also have a semiconductor in them as well. Due to the illness, there were a lot of people working from home and a lot of companies having to upgrade their technology and a lot of people upgrading their technology as well. This led to a huge demand in semiconductors and a shortage of semiconductors. And this demand probably won't slow down in the future because more and more common items which were never really connected to the internet start to become smarter. They will require even more semiconductors. And by the way, if you're enjoying this video so far, make sure you invest in the like button on this video. I would really appreciate it, and subscribe to this channel if you want to see more videos about investing and personal finance. So some of the semiconductor companies which interest me include AMD, Nvidia, and Taiwan semiconductor manufacturers. So they are quite overvalued, but I still think as a long-term hold, they could be a potential good company for me to invest in. So I've actually compared these 3 different semiconductor manufacturers in this spreadsheet, and I will go through it. So the 3 companies that I'm comparing are Nvidia, AMD, and Taiwan semiconductor manufacturers. So the different countries, so Nvidia and AMD, they're both located in the US in California, and Taiwan semiconductor manufacturers are based in Taiwan. Surprise, surprise. The market cap of Nvidia is $339 billion, AMD is $102 billion, and Taiwan semiconductor manufacturers are $568 billion. So it goes Taiwan semiconductor manufacturers, Nvidia, and then AMD. So the main products and the main semiconductors that they all sell pretty similar semiconductors, at least from the research that I've done. I'm definitely not an expert in semiconductors, but it does look like they do have similarities. So Nvidia and AMD seem to focus mainly on gaming and computer chips. Taiwan semiconductors also focus on gaming, smartphones, and computers, but they also seem to have a lot of computer chips in the Internet of Things, which are our everyday items like speakers and things like that are starting to become smarter. What I find really interesting as well is Nvidia also does produce semiconductors for cars as well. And what I think could be quite interesting is also in the future with these semiconductor companies, although they obviously do feel a huge need for our needs at the moment for semiconductors, but there could be an even greater need in the future. I was actually listening to a podcast, Kathy Wood was speaking, the almighty Kathy Wood, and she was saying that with AI and AI technology, there will need to be really high quality semiconductors created for this AI and machine learning. And that could be a really interesting play for some of these semiconductor manufacturers. So return on invested capital basically shows you how effectively a management team is using the capital of a business to grow. So Nvidia has been above 20% for the past 4 years, AMD has been above 10% for the past 3 years, and Taiwan semiconductor manufacturers have been above 15% for the last 9 years. If we have a look at revenue, Nvidia's revenue has been increasing year on year for the past 10 years. AMD has been increasing year on year for the past 5 years, and Taiwan semiconductor manufacturers has been increasing year on year for the past 9 years. So as we can see from those numbers, it looks like return on invested capital and revenue is looking quite strong for Nvidia and Taiwan semiconductor manufacturers. Because AMD is the new kid on the block, it doesn't have some of those long track records that Nvidia and Taiwan semiconductor manufacturers have. And finally, if we have a look at the PE ratio, the PE ratio shows us how overvalued a stock is. So generally an undervalued stock is around 15, but it really depends on the industry. So for Nvidia, the PE ratio is 78. For AMD, the PE ratio is 40, and for Taiwan semiconductor manufacturers, the PE ratio is 30. So the next growth stock, which I think has good long-term potential, is Google. So we all know what Google is. Google is the most widely used search engine in the world. But what you may not have known about Google is it actually also owns over 200 other companies under a business called Alphabet. And some of the companies that you have heard of before that Google owns include YouTube, Android, and Nest. Even though Google is now a bit of a mainstream blue chip stock and it has risen quite a lot over the years, I still think that there is room for Google to grow in the future because they do constantly reinvent themselves and acquire other businesses which are doing great things in the technology space, and they have also expanded their product line as well. I think that Google will only become more valuable as more people use the internet to search for things, watch videos, and also buy a lot of technology products, which are areas that Google has invested in heavily. So now we know more about Google, let's jump into the financials of Google. So most of their revenue comes from Google search ads, YouTube ads, and Google memberships at 83%. And the other portion of their revenue comes from Google Cloud at 6%. Their non-advertising related revenue comes in at 11%. Their return on invested capital has been over 10% for most years, which shows that the management team are using the capital of the business effectively to grow. And the PE ratio of Google is 34.2%. So the next growth stock on my watch list is Alibaba. Alibaba is the Amazon of China, and it operates through 4 segments. They have core e-commerce, cloud computing, digital media and entertainment, and innovation. Alibaba's revenue mainly comes from selling ad space to merchants, and it also collects a commission from sales on its e-commerce platform. Like Google, Alibaba does own many businesses, and some of these businesses include Alibaba, Alipay, Alibaba Cloud, and a few other businesses in the cloud computing and e-commerce space. And full disclosure, I am currently invested in Alibaba. I actually decided to invest in Alibaba back during that time where Jack Ma went missing. Nobody really knew where he was, and there was news going around that the Chinese government was investigating antitrust into Alibaba. A lot of people were a bit spooked by this news, so the share price of Alibaba did drop quite a lot. I guess what I figured at the time was a company of that size can't really just disappear, and even if there may be regulations put in by the Chinese government, I don't think that they would restrict Alibaba so much that they can't really grow the business. So I decided to take a bit of a risk and invest in Alibaba because I do believe in the business long term. Thankfully, Jack Ma is safe and well, and he did make a public appearance since then. But I guess that is always a bit of a risk to consider when you are investing in international stocks. Government also definitely does play a role in how these businesses will grow in the future. So let's jump into the financials of Alibaba. So the revenue has been increasing year on year for the past 10 years. It went from 6 billion in 2011 to 510 billion in 2021, which is an 8,400% increase. Massive. They have benefited massively from the lockdowns over the past year, so sales actually didn't slow down that much. They actually started to speed up in a lot of categories. Alibaba's free cash flow is positive and increasing year on year. They currently have $218 billion in free cash flow. Return on invested capital has been around 10% for the past 10 years, and I think that there still is quite a lot of room for Alibaba to grow. So the next stock on my watch watch list is Facebook. So Facebook and Instagram are social media sites that I spend way too much time on, and I think that they have a really great business model because they are fully digital, so they don't have high overheads. And so they're able to increase their revenue without having to spend a lot of money to increase their business operations. For example, if an advertiser comes onto the Facebook advertising platform, so if they wanted to spend $100,000 or even $500,000, Facebook can easily facilitate that spend. Whereas a business like Apple would need to create more iPhones in order to get higher sales. So even though Facebook's popularity in terms of social media has decreased a little bit over the years, I still think that they have quite a lot of big social media platforms, and they will be able to pivot their strategy and really grow and thrive in the future. They actually own the top 4 out of the top 6 most popular social networking apps in the world, including Instagram, WhatsApp, Facebook Messenger, and of course Facebook. And they're constantly evolving their platforms in order to keep users engaged. For example, did you see how they introduced Reels on their platform as a kind of copycat of TikTok, and the way that they also introduced stories on their platform to kind of copy Snapchat? They are constantly evolving their platform so that they can keep users engaged. So let's take a look into the financials of Facebook. So most of their revenue actually comes from their Facebook advertising. Their net income has also increased substantially over the past 9 years. It went from $2 billion to $71 billion. And their return on invested capital has been around 20% each year. So this brings me to the last stock on my watch list, which is Booking.com. So the illness has obviously impacted a lot of businesses, but arguably one of the industries that it has impacted the most is the travel industry. Booking.com is the world's largest online travel agency by sales. It offers bookings on hotel rooms, vacation rooms, airline tickets, rental cars, restaurant reservations, cruises, experiences, and pretty much all your vacation needs. It also owns multiple other websites apart from just Booking.com, including Agoda, OpenTable, RentalCars.com, and also Priceline. And it has also expanded and acquired other websites like Kayak and Momondo. Most of their revenue comes from transaction fees from online bookings. Even though Booking.com has been absolutely smashed by the illness going around, I still do think that they are poised quite well for recovery. Revenue has been going up year on year, except for 2020, obviously. It's pretty sad, but their revenue went from over $5 billion to just $580 million from 2019 to 2020. They also used to have billions of dollars in free cash flow, but now they are actually in the negatives, which is why I think it's so important to invest in businesses that do have a healthy amount of free cash flow, because we never really know what can happen. Return on invested capital has been above 10% for the past 9 years. However, of course, in 2020, it was negative 0.56%. Even though Booking.com's numbers have definitely fallen off a cliff in 2020 because of the illness, I think that they will start to pick up back again, especially once we can start traveling again. The PE ratio is also pretty ridiculous at 1,617 because they have been taking on a lot of debt and they actually aren't making very much money at the moment. So it's obviously not all sunshine and rainbows for Booking.com. They are obviously going through quite a lot of stuff at the moment. So that is my watch list of growth stocks that I'm currently looking into, and I would love to know what your watch list is down in the comments below. Thank you so much for watching this video. I hope you enjoyed it. If you did like this video, make sure you give this video a like and subscribe to this channel for more videos about investing and personal finance. See ya! And if you'd like to see some more videos, I've got some links to some videos here, so make sure you click the links and click through to another video.